Triskaidekaphobia. 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 I did it 3 times fast. That is the fear of Friday the 13th. So happy Friday the 13th. Koki Cox here with Alpha Vest. Do you have triskaidekaphobia? I was doing a little back research for today's 3 for 3. And yeah, Friday the 13th, it's today. Some things, studies or research showed that people think Fridays are unlucky. I don't know who those people are, but a lot of people do have a fear of the number 13. Apparently, this goes back to medieval and ancient times. That said, are you superstitious? Well, we got to bring it back to markets, right? For 3 for 3. Today, we'll be talking about weekend review as well as winners and losers. And, I wanted to bring the discussion a little more in focus with respect to macro. And maybe not macro isn't the exact right word, but I'm tired of talking about interest rates. You're tired about hearing about interest rates. You're tired of hearing about inflation. So the biggest aha I had this week, I had the opportunity to listen in with chief market strategist, global alternatives strategist Troy Gayeski with FS Investments. They manage 75 billion in assets across the globe. More of an alternative strategy manager, which is a great area to be in right now given volatility. And he said something that really struck me that I thought maybe investors would want to hear right now. And I'm going to transmute what he said into sort of an analogy. But what he was talking about is just the temperature reading and how whether or not, in successful investors and successful investing strategies really depend on what's the temperature reading. Is it red, yellow, or green? And when he said that, it made me think of a stoplight and a journey. And as you're approaching a stoplight, and maybe you're on a busy highway, maybe there's school buses around, maybe there's construction everywhere, aka all these things are extraneous noise and market events and headwinds with orange cones or school buses, or how about a Kamala Harris motorcade? That happened this week. All of these different things, headwinds, the higher for longer theme with respect to interest rates, Hamas, political unrest with us not having a speaker. All of these uncertainties are all these busy things on the highway, right? You approach the stoplight's turning yellow. Most of us sort of slow down because we know it's coming. We know red, stop, is coming. But are you on a cross-country journey where you've got 30 long hours ahead of you and not in a great rush? Or are you 10 minutes late for an appointment a mile down the road? Because some people will speed through that yellow light, right? Well, the same could be true for your investments right now. So how do you feel about the temperature reading? I've had lots of conversations with clients over the last 2 weeks, heading into the new quarter as we're deploying different and new strategies to offset higher interest rates as well as lower and perhaps sideways equity markets. And the temperature reading is across the board because everybody's different. Some people have a cross-country journey to California, and some people are rushing to the appointment downtown. Okay, so where are you? Are you in a withdrawal strategy and you're currently retired? Or do you have 20 more years to retire? So these will drive a lot of your allocation decisions. And you've heard me talk ad nauseum about 3-6-10. If you don't know about 3-6-10 and you are nearing a withdrawal strategy in the next 5 years, you need to be on a 3-6-10 allocation so that you can safely allocate your investments to the proper places. So that said, is it red, yellow, or green right now? What do you think the temperature reading on the field is? Resoundingly, Whether you want to talk to economists who constantly get it wrong, or whether you want to talk to chief market strategists who consistently get it wrong, or whether you want to talk to advisors who often get it wrong, we all are saying that, the color on the field is yellow. We are approaching the yellow. Does it mean we're going to get a red light, like the stoplight analogy? Not necessarily, no. But this chart you see in front of you, I wanted to bring to you, our indicators went negative last week. And so we do have a good bit on the sidelines for those of you who are in a more moderate to moderately conservative or conservative allocation stance. This is the percent of positive trend chart. While it might be hard to look at, you can see the two are sort of tied for the last 23 years. And this is just a, staying fully invested, always invested strategy vis-a-vis that of a switching strategy, similar to that of what we deploy and use within our tactical strategies, as well as within our 3-6-10 allocation. Note these sections here that I'm sort of highlighting on the screen where the red line is flat. Those are times in which the percent of positive trend is under 50%, meaning less than 50% of stocks within the S&P 500 are trading on a positive trend. That is not good. It's a tide you don't want to swim against. And you can see that consistently since 2009, the strategy has outperformed until recently, and that's thanks to the Magnificent Seven. The seven stocks we're also tired of hearing about that have really driven asset valuations in the last couple of years. And you can see here they're about even, okay? But the question is if you have that long journey, these moments out in the market might not matter to you, okay? But for those that are in a withdrawal strategy, taking these pauses when the light gets yellow or red is imperative to a successful retirement strategy. So that said, if you'd like to hear more about the indicators under our hood that help guide us with respect to tactically timing our 6-year switching bucket, please ping me, reach out, love your feedback, comments, questions. That said, rounding the bin here for 3 for 3 on Friday the 13th, let's look at our spooky losers and our happy winners. That said, starting with the losers, we saw oil pull back a little bit, yet here towards the end of the week, OPEC did spike up, and you will see that some of our oil holdings are actually on the top of our winners list as well. ExxonMobil, however, is the top of our losers this week with a merger happening with Pioneer Resources. There's some data out there that might not be very accretive or a positive thing for Exxon, the global giant. So that's under review with investment committee. That said, Eli Lilly continues to top the charts for our winners and one of the shining darlings in most of your portfolios. With, again, you see MLPX and MLP ETF we're deploying in our tactical strategy, as well as XES, which is the S&P oil and gas equipment, also deployed in our tactical strategy. One of the top winners this week, up over 6%. Markets were great and up this week from the Dow to the S&P to the NASDAQ, up between 1.5% and 3%. Whether or not that will continue, again, based on indicators that are absolutely flashing yellow, we will continue to see. But for those on a conservative or moderately conservative stance, you can rest assured with AlphaVest that you're in a good place and on the sidelines. That said, I'm running over today 3 for 3 because it's spooky Friday the 13th, but I want to give a shout out to Perfect Day because I have an admission to make. I have LDD. I have lifestyle deficit disorder. As many clients asked with the transition to fully AlphaVest and, how is that going to play into my lifestyle? I said, nothing's going to be different. It has been different. It has been. And I want to say this. I am loving the challenge and I'm really enjoying the different work activities that have been on my plate. That said, our team has grown. to help us meet these demands. And I am enjoying it, and it's a season. So that's my encouragement and shout out to those who do suffer from lifestyle deficit disorder every now and again. If it's seasonally, that's fine. But, if you're consistently giving your family and your friends your leftovers, or your clients your leftovers, then something needs to be done. So, in this theme of where I'm wanting to talk less today about inflation and FOMC and Senate, and we're talking more red, yellow, green. I think that goes hand in hand with the theme of perfect day. So that said, many clients have gone through the perfect day process. And if that's something that interests you, and if you've already gone through the process, we do have Perfect Day Connect, which is live and online, and you can go through the modules in your own time. I want to offer it to you today at 100 off. So that's the code, 100 off. If you're feeling like you want to finish 2023 strong and or get a jump on 2024 with respect to rewiring and dialing in more gratitude as opposed to watching the bottom line on, say, the losers each week in the portfolio. If you want to get more of your time back and help with some help with a format or a template to help you stay focused. Would love it if you'd request a copy of Perfect Day. We'll put that in the mail to you. And again, if you want to go to perfectdayconnect.com, you can enter code 100 off and enter those modules in your own time. And of course, I'd love to be there every step of the way. So with that said, I will be redialing back into Perfect Day this weekend myself, and I invite you to come along with me. That said, this concludes Friday the 13th, 3 for 3. Glad you could join us. The deeper and longer, better version is available on the blog at alphavest.com, and make sure you're also getting our weekly newsletter. Thanks for joining us. And of course, I'm always sending you a perfect day.